When you have US, China basically trying to carve up the world into separate competing tech blocks, when it's a matter of national policy to like dominate these respective strategic industries, there are just inevitably going to be state prerogatives at play in how capital is allocated. And I think we're just seeing it's such a blunt force application. They all go to the White House and they announce these multi-$100 billion investment pledges, you know, from Sam Altman to Mark Zuckerberg. They're all kind of trying to kiss the ring. And I think that's an exertion of national strategic power and interest over multinational global companies. That's kind of like a progressive talking point for like, you know, not too long ago, right? It's like these big tech companies, they have too much power. They're not accountable to democracy. And to a certain extent, like, I would want Trump to be doing more on the like liberty side. Like if he's got the power, the solution to that isn't to just be like, all right, like the government basically whacks you on the head and says, give me 15% of your sales, NVIDIA.
All right, we're back with the Bitcoin policy hour after a long hiatus here. We've got a lot to catch up on, but just as usual, joined each week here by Matt Pines, BPI's executive director, and Zack Shapiro, BPI's head of policy. And we're going to dig into some of the most recent kind of updates around Bitcoin policy, maybe emerging tech more broadly here to foreshadow our conversation. Yeah, let's jump into it here. I think first topic for the day, as we've been away for a bit, is to sort of reassess where we are at on the policy front. So major priorities being market structure bill, and then maybe talk a little bit about the strategic Bitcoin reserve. I know there's a couple of updates on that as well. But yeah, Pines, let's jump off here. What's kind of the lay of the land on market structure? I know there's been a new draft bill from the Senate Banking Committee. And then we've also seen a framework from Senate Democrats about kind of what they're looking for here in that bill. But yeah, just kind of curious where we're at and how long you see that taking to really come to a conclusion.
Yeah, I guess maybe I'll signpost kind of the structural progression we've been on, and then I'll tag Zack in to kind of zoom in to clarity. The signpost I would draw is like Trump gets elected, executive orders, established the strategic Bitcoin reserve. They have president's working group on digital assets. They start cramming on Genius. They get Genius passed, bipartisan vote. They then released the president's working group of digital assets sort of synoptic report, which was in just before, it was like end of July. And that was kind of the milestone book report, essentially, covering the waterfront. We've talked about that before and kind of teed up additional priorities to kind of drive action, but to implement Genius Act, you know, refocus congressional attention on market structure, and then, you know, potentially make good on this, you know, left hanging promise to identify budget neutral ways of adding additional Bitcoin to the strategic Bitcoin reserve. And so we're kind of in the middle of that arc, and it's not clear like when or if different threads are gonna get tied together, right? I'd say like my top level macro view is that market structure is not a done deal, although more likely than not, but not as I think people were expecting in some optimistic corners, like rapid action September, October. I think it's more likely to take a lot longer. At the same time, I think the prevailing mood is that action on the SBR essentially is dependent on progress on market structure first. And so, you know, SBR in terms of taking up action, you know, from the White House's perspective publicly, and then and legislatively is kind of an if then, right, relative to market structure. That's not to say there isn't further action, I think, happening on SBR related kind of policy discussions inside DC, but it's not like the top priority right now, right? And so that's kind of like the waterfront summary view here. I think folks were kind of off in the summer. August is kind of a dead zone in DC, and now we're, you know, back in session, and things are kicking back up with a high tempo. And that's a good segue to Zack to discuss what the Democrats just dropped the other day as sort of the shot across the bow, a statement of principles from their perspective on market structure. It kind of sets the tone for the negotiations that are now taking place both between the House and the Senate, as well as within both houses between different camps.
Yeah, absolutely. So the Democrats put out, I think it was a 6-page document outlining their sort of high-level principles for what a market structure bill should look like. It was mostly fluff. I mean, to be honest, it's a step in the right direction. It's a lot less fluff than Crypto for Harris was, which was just entirely sort of principles that are untethered from policy. Here, at least, there are sort of nods in the directions of policy. And overall, it's notable in that it is supportive of the digital asset industry writ large. It recognizes that digital assets are important, that there are jobs to be had, that there is economic gains to be had by embracing Bitcoin and crypto, that we need to figure out the sort of securities versus commodities questions for token launches, which is maybe not so important to Bitcoiners. But then also, I think the important point that we need to be able to integrate a blockchain into our existing securities infrastructure, which is something that is both important for broader crypto, but also for lots of things in Bitcoin. If we want to have a sort of native Bitcoin-based token exchanges, if we want Bitcoin itself to be able to trade on major indices, if we want deeper liquidity, these are all important things to have. The sort of couple concerning parts of the democratic principles, there are sort of two references, one in the sort of DeFi section and one in the illicit finance section, to sort of vaguely saying we need to deal with bad actors' use of DeFi or people using blockchain rails, in a non-custodial sense, to skirt around the Bank Secrecy Act. And so, there's some version of that I guess is relatively harmless, which is making sure that the people to whom the Bank Secrecy Act applies, because they are regulated custodial institutions, are compliant. That's not such a big deal. Or, there's another way to take that, which is to expand the reach of the Bank Secrecy Act and then try and regulate DeFi as sort of a regulated financial entity rather than as a pure peer-to-peer infrastructure, which would be really problematic. So that's an important thing to keep an eye on. I expect that is going to be a sort of big point of contention, especially coming from the Elizabeth Warren wing of the Democratic Party, around the sort of existing Clarity Act framework. But we'll see. Putting that aside, I think that the sort of the principles that the Democrats put out, with the exception of the section specifically about Trump and his family and, advocating for language that would cause essentially the Trump family to have to divest from crypto, I think this gels with the existing Clarity Act pretty well. And so I think where it differs, is this Trump language and then potentially sort of adding Bank Secrecy Act compliance to DeFi. I think these are the two battles we are going to have when this comes up for discussion in the Senate. And these are going to be the two issues that, if the Clarity Act is going to make it through, we're going to have to pull over some number of Democratic senators across the line to support these issues. So definitely something to keep an eye on. I think with regard to the existing Clarity Act, I think it will probably come up for a vote by the end of this year. I also think it is more likely than not to pass, but definitely not a done deal. And there is a sort of worst of all worlds here where it passes and does not have the protections for non-custodial developers and just kind of becomes a money grab for sort of token VCs. And we really need to sort of be vigilant about that. The only other part of the Democrats' principles here I think is worth noting, it's not quite about the market structure bill, but they really go out of their way to reaffirm the prohibition in the Genius Act against yield-bearing stablecoins, passing on the interest that stablecoin issuers have to their consumers. So lots of people listening to this will be familiar with Tether and probably even familiar with Tether being basically the most profitable company in the world. The reason they're so profitable is that they are selling dollar-denominated tokens for $1, and they are taking the dollars they receive and investing them in various securities, mostly sort of high-quality paper. A lot of it's government debt, and they're just keeping all the float on that, right? They're making free money on a sort of stablecoin base of now hundreds of billions of dollars. It would seem logical that there should be competition in the market to share some of that revenue to encourage people to hold, X stablecoin instead of Y stablecoin. You can absolutely still put in customer protections to make sure that the yield isn't coming from a shady place like we've seen with previous sort of algorithmic stablecoins. The reason that the Genius Act disallowed this kind of sharing of the profits is because banks have very powerful lobbyists, and banks are worried that if you can hold a stablecoin and make good yield, why would you ever deal with a sort of depository account at a bank where it is a sort of nightmare to deal with them and you're making less money on your money? So this is definitely, I think, naked protectionism from the banking lobby, but it's interesting how prominently that shows up in this Democratic statement of principle. So another thing to keep an eye on there. But, all of this TLDR, unclear whether this document from the Democrats is hostile to the sort of non-custodial developer protections. We'll find out later this year, but my expectation is still that the main fights are going to be about illicit finance, including the regulation of non-custodial tools in DeFi, and then there's going to be a large fight about perceived sort of corruption by the Trump family, by the Republicans having to do with crypto, because the Democrats see that as a good political issue and a fight that they want to have in public.
Zach, I want to kind of narrow in also on the most recent draft from the banking committee that I think that was released maybe last Friday, that had sort of largely revamped, it seemed like, section on protecting non-custodial developers. In fact, I think it was like one whole section of the bill itself was basically dedicated to that particular question. And I have seen folks on Twitter saying, look, like this is like the best language we've seen. There is a clear statement that, basically like section 1960, there will be protections for non-custodial developers against those particular questions. So yeah, just kind of curious, I guess, A, do you see like that particular section having legs? And B, what do you make of them actually like sort of spending more time and working on that section and improving it?
We'll see. I mean, I think the sort of high level issue is that the Democrats who are opposed to crypto, which is not all Democrats, but the ones who are opposed to crypto, the Elizabeth Warren camp, they really have keyed on to this issue as like a sort of soft underbelly of the industry. If you apply rules to non-custodial tools that are impossible to comply with, then that's going to push crypto out of the United States, which some part of the Democratic Party is trying to do. And so what I think this is about is, I mean, the banking committee is also well aware of this. This is one of the least controversial issues within the crypto community, because everyone knows that if crypto and Web3 is going to mean anything, it's going to require the ability to use these tools in a peer-to-peer non-custodial manner. And so what I think this really is a sort of a bargaining position, sort of from the pro-crypto side of the industry, to have a sort of stronger version. I think there is going to be negotiation about this section in particular. But if we land anywhere even like the original Clarity Act protections, that's a big step in the right direction. This is not the only shot on goal to do that, right? We can also win in the courts. That's not been going great so far with the Tornado Cash verdict and the Samurai plea. But, having any kind of language that just, for the avoidance of doubt, you are not a money transmitter if you don't have custody or control, and to go as far as the current version of the Clarity Act says that it's total independent and unilateral custody or control. That would be a huge step in the right direction.
Great. Pines, anything to add on market structure? Should we move on?
We can move on.
Cool. Okay. Next on the list, I think there was a bill that was introduced, basically, I think intended to be an amendment for the appropriations bill that we're expecting here in the fall, basically tasking the Treasury with what seemed to me like they had already been tasked with via, President Trump's executive order around the strategic Bitcoin reserve. And either of you are welcome to take this, but to what extent do you see that sort of playing into the appropriations discussion? Are we sort of positioned properly to make a push there? And again, I guess like what's the timeline here? What can folks expect coming down the pipe?
You talk about the National Defense Authorization Act?
No, let's see. Representative Joyce of Ohio introduced HR 5166. A couple quotes from here. Secretary of the Treasury is directed to issue a report to committees on appropriations of the House of Representatives no later than 90 days after the date of enactment of this act on the practicability of establishing a strategic Bitcoin reserve and U.S. digital asset stockpile.
I think this is a restatement of what the executive order said. And again, I think like similar to the last topic, I think this is largely a signal that like, hey, we haven't forgot about this, and that this is a live political issue and is a show of support for the industry. I think in terms of like realistic timelines to get this stuff done, I mean, there are sort of two tracks. There's the executive branch track, which, this is a sign that they're still looking into. But I think one thing we know about this administration, it's an incredibly top-down administration. And that just is a little bit boils down to, when does the White House start to really care about this? And I think if they decide they start to care about this, they will find all sorts of budget neutral ways to be able to acquire Bitcoin without additional congressional appropriation for it. I think the sort of legislative track, the NDAA, I think that's a little bit, there's going to have to be sort of more ground game politics done before that is realistic.
I mean, yeah, stepping back, right? Like the strategic Bitcoin reserve is the most sensitive element of the administration's crypto policy writ large, because I think it's seen by certain folks in the Treasury Department, maybe some folks at the White House, as kind of being the most kind of nonlinear policy move, right? A lot of these other things, like the Genius Act, one everyone kind of understands, good for the dollar, good for America's debt servicing. Even Russia was sort of mad about how this might just be a
Yeah.
rug pull on the debt markets. It's like pretty obvious the strategy of externalizing financial repression and leveraging crypto networks, right, for US strategic purposes. If you look at history, right, like any shift in monetary reserve assets is usually driven by massive geopolitical upheaval, and it's taken as a matter of like the most serious national strategic decision making. And so you don't just kind of like inch your way into that. It's usually preconditions are set, and the political and geopolitical conditions have to be ripe for it to be a major move, right? It's not going to be as incremental as these other policy things where it's like, okay, lots of study reports, lots of congressional debate on different draft bills. It's going to be people putting a sort of Chekhov's gun on the table, and then everyone walks around and pretends the gun's not there until the end of Act 3, when America has to pick up the gun. And so the gun has been placed on the table, and all the characters are walking around and mostly ignoring it. But now it's there, and so it's less of telling like a linear progression story like you tell in these other policy legislative initiatives where things get introduced, things get debated. It's more like, okay, if the government is actually going to decide to acquire a meaningful amount of Bitcoin as a strategic asset beyond just sort of pure symbolic kind of political signaling, that is a 0 to 1 moment. You can't undo that. And the political and geopolitical conditions have to be ripe. I mean, I think the objective assessment situation is right now, it's not a strategic necessity, right? I think we've made the case that it's prudent to acquire a meaningful position in advance of when it's a strategic necessity. But that's that's a normative argument to try to convince the government they should get ahead of what, is usually done in extremis, right? But, politics is politics, and geopolitics and the lessons of history tell us that usually these things happen when it's inevitable, right? The US was being drained of its gold for years before they realized, like, we have to rug pull everyone. And that happened on a weekend at Camp David, right? And so there are many people probably credibly making the case for years, I don't know, the system doesn't seem sustainable. And then 3 or 4 more years go by, right? Before the political and the geopolitical conditions trigger national leadership to get around the table on a weekend and decide to do something quite dramatic. So we're not there yet, but you can see the conditions developing in that direction. Maybe they can forestall that, but now that Chekhov's gun has sort of been put on the table, it's a subject more of behind the scenes discussion and debate than I think a whole lot of like incremental policy adjustments. That being said, I think there's also just different views of how to think about monetary policy, monetary reserve asset decision making, and strategic U.S. interests that are divided between different, set powers of center in the U.S. government. Traditionally, right, the Treasury Department is the steward of the nation's finances, the sort of financial crisis firefighter, and they often are, very, very important for engaging in geopolitical sort of policy moves, right? As we saw with the post-Russia sort of sanctions, that was sort of Secretary Yellen calling up all the G7 finance ministers to coordinate the blocking and freezing of Russia's central bank reserves. In this current environment, there's other stakeholders now, right? Importantly, the Pentagon and the intelligence community that traditionally have not, stepped into the lane of, kind of monetary policy or reserve asset policy. They sort of, that's Treasury Department, that's their business. We might be entering a unique moment, right, which only happens in every generation or two, where the national security stakeholders realize that like the basic premise of deterrence and our industrial capacity and our national security and our defense kind of requires an adjustment of our monetary and reserve asset position vis-a-vis these emerging assets like digital assets, in particular stablecoins and Bitcoin, and how adversaries might be weaponizing gold in particular against sovereign debt markets. And so this is a complicated new set of questions in terms of statecraft that our political system hasn't really had to address for many decades. And then you have strong personalities at the top of these different forms and agencies that are all competing for attention from the big man. And it's a mix of short-term, tactical moves and long-term strategy. And always it's a trade-off between making hard decisions in the short run versus, trying to steer US towards a better strategic position and mitigate some of these acute vulnerabilities. So That's a bit of a long winding disquisition on the SPR, but it's important to kind of think about it slightly differently than you think about these other policy topics. Because it is so sensitive, right? They can't really be too upfront about how they talk about it. As we saw, like now Russia's picking up on the game, right? They're like, oh, America's basically gonna move all of its debt to the crypto cloud and then devalue it and sort of rug pull everyone that's holding a stablecoin, which is an evocative way of framing what is essentially just going to be, externalized financial repression through crypto Eurodollars. It's not entirely wrong, but yeah, it's interesting now that it seems very clear that that was a senior advisor to Putin who represents Russia at all like the BRICS forums and whatnot, right? So classic kind of dollar doomer, but it reflects now the conversation is moving outside of just sort of the traditional kind of banking committee type discussions and lawyers at the Treasury Department to national security decision makers, but it hasn't quite resolved, right? Like who kind of has the bead on these sorts of policy moves, and until there's a crisis or until it becomes such an acute issue, no one's going to like spend political capital inside those different buildings to push something that there's kind of internal resistance to right now.
Yep. All right, Pines, when we were chatting before this, you mentioned that you're sort of tracking maybe a new trend here where we're seeing sort of market cycles in the crypto industry matching up with political cycles, and we're still, I think, fairly fresh in this Trump cycle, you might say. I think a lot of what we were discussing was that a lot of the current sort of bull market, you might say, is sort of on the coattails of the election last November. But yeah, curious kind of what you're seeing in that, and what we're kind of looking at going into midterms here. I think especially on the lobbying side, right? We had a lot of crypto money in the last election cycle. Are we going to see that again?
Yeah, if you want to like predict the future, right, and you understand like what are the drivers of the future, and traditionally markets, at least in the U.S., right, there've always been some geopolitical and political conditions, right. There's been well-known studies of how markets traditionally behave around the U.S. election cycle. So this is like a well-known topic of macroeconomic and sort of political economic study. I think we have that in place, but now much more acute drivers that are sort of amplifying the interdependency between market cycles and political cycles and geopolitical cycles. And they all seem to be converging at the same time in sort of upswings and downswings, right? And so you look at the kind of incentives and constraints of people that control, major drivers of the national monetary and economic system. And you realize that like they're kind of shifting structurally in a direction, which is one, like more fiscal dominance, as Lynn Alden has pointed at, right? Nothing stopped this train in terms of the amount of debt that we have to continue to service at high interest rates. And that just imposes a boundary constraint on all national leadership, Congress, the White House, Treasury Secretary Bessent. It's the thing they have to manage. They have to keep interest costs serviceable. They have to try to find new buyers of debt. They have to issue more at the short end. That is in general more supportive for liquidity. Then you have Trump, who wants to win midterms next year. And you have Vice President Vance, which may want to run and win in 2028. And they also are going up against a technology cycle, which is going to potentially lead to increasing economic displacement, which could, again, like net require larger outlays for unemployment insurance, et cetera. So all of these things are also happening in the landscape of like U.S.-China competition, where we have to spend more to reshore, to essentially do more like what you might call like hybrid capitalism, right? Taking more structural investment stakes in national champions like Intel. And the government just playing a larger role in the economy to steer towards strategic purposes as well as political purposes. And crypto is subject to all of that on multiple dimensions, right? Like one is just a first order liquidity gauge. There's more fiscal spending, there's more debt issuance, so there's more liquidity in the system. Bitcoin tends to go up. The large digital assets ecosystem tends to respond positively. Then you have Trump's personal and like related family enterprises that are very much long Bitcoin and getting longer Bitcoin like as we speak. And so there's a political incentive for crypto markets to continue to appreciate. And crypto as an industry has like thrown its political muscle around. And so we're entering into a 2026 election cycle where there's going to be more potential super PACs raising money and deploying that into elections. And so all of these things like structurally mean that like the more asset prices go up, right, the more the tax receipts the government has to service its debt, the more political campaign contributions can flow in, or the more we can attract capital that would otherwise be sort of scared off by more kind of state interventionism in the U.S. Sort of quote free markets, and the more that we can deploy kind of the surpluses from that asset appreciation into strategic projects that are necessary to maintain a national security economic advantage, over China. So like all things point to like numbers have to go up for both political and geopolitical reasons. And so this is why I think ultimately you have to be kind of bullish on all asset prices on like a medium term basis, right? If I'm just going to be like putting on my market forecaster hat on. Now at the same time, like these markets can be, because they're sort of not really being driven by economic fundamentals, right? To a certain extent, people's psychology about future can change very quickly. Political instability or uncertainty rapidly gets fed back into into economic and financial markets. And it seems like it's a bit of a meme. And so memes can become a reality, which is people lose trust in economic data, recently for multiple reasons, right? It's funny how like Republicans have been, accusing kind of the institutions responsible for economic data of kind of massive revisions, maybe politically motivated revisions. But at the same time, that means that like, well, at this point, like nobody's going to trust the data, right? It's like just because you put your people in there, then Democrats will be like, oh, well, then and so now we've politicized basic economic indicators, which is it is what it is. But it means just the general level of noise in the economic environment about people, how they can price the future, price assets is going to change like much more rapidly while we have accelerating technology change. And so that's a lot to sort of pack into one mega thesis. Well, I think generally speaking, right, like assets have to go up for kind of structural, political, and geopolitical reasons, but there's an underlying fragility associated with that process, which means that you could have rapid swings. So I think overall volatility goes up as well.
I want to dig into the Intel piece here, and I'm going to go to Zach here. But before I do, I was listening to some conversations, people talking about, is this a good thing? Is this a bad thing? And I think generally speaking, like the arguments for why it was an important thing to do, largely just kind of centered on the like geopolitical and strategic value of Intel, right? And the argument basically was, this is obviously overly simplified, but that we ought to do this because we have a strategic stake in Intel remaining sort of powerful and on U.S. shores and et cetera. And like to some extent, right, it seems like the same argument could be made about Bitcoin. Maybe it's a little bit different, but just kind of curious on what kind of precedent this might set. Basically, like what we make of this happening is something that's going to happen in the future, and if you can relate it to Bitcoin, feel free.
I think this is pretty dangerous precedent, to be honest. I mean, the United States government has taken an interest in businesses before that are in real distress, that are systemically important, right? Especially in the aftermath of the 2008 crisis. But I think, taking a sort of leaf out of China's playbook and declaring a national champion that is, partially state-owned, even if you trust the current administration to do this in the vein of international competition and sort of a pro-capitalism perspective, this is just obviously something that the sort of less pro-capitalism left is going to do. And I don't know, I just worry about the sort of undue influence that the government can have by having such a big stake in a company, what the incentives are when it comes time to procure government services, whether you sort of just have to go to the national champion to buy it, whether that drives prices in the wrong direction. I know that this might sound a little bit hypocritical given our view on the SBR, but I think it's fundamentally different for the government to stockpile a neutral commodity like Bitcoin than it is to, take an active stake in a company, regardless of whether they say they're going to exercise direct control or not. I think broader in terms of the political question for Bitcoin right now, I think sort of we need to, as a Bitcoin community, we need to sort of reorient to sort of where specifically we want to be. The sort of political line for Bitcoin up until this point has been very clear. We were more or less under attack by the previous administration. They took a pretty anti-Bitcoin stance, largely because of Elizabeth Warren's influence in that administration and her personal views on Bitcoin. And so a lot of the sort of political muscle that the Bitcoin and crypto industry has thrown around over the last year to a year and a half has been sort of just negative partisanship aimed at reversing what was the status quo. And that was really important. And we've been very successful in that. And that's great. But now we've sort of caught the car. And the question is, what's next? And I think there are some sort of policy goals that are, important to us that we've talked about a lot. Protecting peer-to-peer technology, super important. Having the government understand Bitcoin the asset as a tool super important. I think we're making progress on that. And, you know, we talk about it sort of week in and week out. But I think we focus a little bit too much on the sort of long-term pie in the sky versions of this. And it's important to take stock of like really how far the Overton window has moved on both of these. Like we've been remarkably successful both in DC and Wall Street at mainstreaming the idea of Bitcoin as a neutral reserve asset. Like that just isn't weird anymore, even to people that are not Bitcoiners. And you know, I think the Blanche memo and the sort of recent draft, the market structure bill, I think we've done a really good job centering the need for non-custodial protections. Certainly that fight isn't done. But then the question is like, okay, what other than that is our relationship with government going to be when we don't have such an obvious enemy as we had in the sort of anti-crypto army in the last administration? I think there is a risk in, I mean, this administration has been great at listening to the industry and really carrying forward our objectives, but it's also been very polarizing. And I do think that there is, to say the quiet part out loud, there is risk about being sort of overly seen as like the MAGA coin. I think especially when there are so many reasons for progressives to embrace open source technology like Bitcoin, like the sort of tools that are built around Bitcoin to allow speech, to allow financial inclusion, and then also sort of other related technologies like open source, open weight AI. And I think one of the things we want to keep an eye on is while there is most of this administration left, and we absolutely want to move the ball forward on our key policy objectives that we agree with this administration on, is doing some reaching across the aisle as well and building a broader support base, both for our legislative priorities, which are going to require some amount of Democratic buy-in to get through the Senate, but also some sort of downside protection, because even outside of Bitcoin, one of the big trends we've seen definitely in a sort of step function different way in this administration, but really over the last, I don't know, half century, is increasing concentrated power in the executive branch. And if, you know, Democrats were to take the White House, you don't want them to have all sorts of new tool sets plus the motivation to just do reprisals, right? And you know, like everything that Trump did was bad, and we're going to use all of the same tools that he basically fashioned for himself to just do the opposite of what he did. That would be a really bad outcome for the Bitcoin community. And that would involve, you know, at the very least, you know, painful, intrusive investigations into lots of people in the industry, very likely prosecutions of people, potentially including software developers. And so, you know, getting in front of that, I think needs to be a pretty high priority right now.
Yeah, I have lots of thoughts on that, Zach. And so starting with, like the second piece, which is like the personalization of the presidency is, you know, kind of creates risk across the board, right? And, you know, there's ways to try to mitigate that in terms of pursuing policies that we think are good for the national interest of the long term, and ensuring we have a broad coalition that is aligned on values, is aligned on core principles that I think are pretty common across the political aisle, and emphasizing kind of shared commitment to open systems, open markets, competition, liberal values, privacy. These are things are, I think, core to the American system, the American sort of value set, make us competitive, make us dynamic. I think, you know, speaking to that vision of the future that stretches beyond kind of the high frequency tempo of our political cycle, is important, like anchoring to the long game. I know BPI intends to exist in DC indefinitely. And so we are planning to exist under all sorts of different political administrations, right? And so I think everyone should sort of adopt a strategy that is resilient to all sorts of pendulum swings. So that's like point one. I think that's sort of like a meta strategy. Going back to like the hybrid capitalism, state capitalism, industrial policy question, which I think intersects with Bitcoin in a slightly different way, right? In a certain sense of like one of the diagnostic accusations of the current system by Bitcoiners, and Luke Groman is a great articulator of this, is that the current economic and monetary system is structurally imbalanced, right? You know, the US-China trade relationship, the reason why we have such an imbalanced global system, you know, could be traced to many different sort of proximate causes, but like the sort of Triffin's dilemma, the fact that we have to run structural trade deficits, I mean, sort of upstream of a lot of these pathologies. And so if the government recognizes that it's trying to shift or needs to shift to a different fundamental, you know, structure for how the global economic and capital system works, it's about essentially imposing capital controls. It's about, you know, gating access to our assets, right? The current system is foreigners, mostly, you know, our rivals, run structural surpluses, and then they have traditionally recycled those surpluses into our assets, our equity markets, our real estate. et cetera. That's been the system, right? And our finance, insurance, real estate sector has benefited. It's also meant that like our quote rivals have potentially, acquired significant ownership stakes of a lot of our, national champions that we would rather those be owned by, American or American aligned interests. And so this is maybe a structural necessity of, if you decide that the current system is imbalanced, and you feel that like quote adversarial capital can no longer be allowed to sort of freely purchase up your prized assets, and you also realize that there are technological requirements that you have to like subsidize, this is like what you are forced into, right? And this is, so I'm kind of mixed opinions on the Intel thing, because I think like in general, right, like the idea of like ring fencing our national capital markets from sort of adversary, ownership or manipulation is like a net good thing. But you don't want to like replace one sort of authoritarian subversion of capitalism with a domestic authoritarian subversion of the capital system, right? Ideally, it's kind of like it's like emergency medicine that
Well,
you get.
isn't that what CFIUS is?
So CFIUS is meant to block like true, threatened, like adversarial capital that's meant to acquire and control U.S. equity or U.S. technology. You could say Intel is like more about saving the foundry business, right? Ultimately, like the foundry business is seen as like critical. We're putting all of our chips on TSMC, trying to build Arizona, but like, national strategic survival, you could argue, requires having kind of redundancy in terms of your access to leading edge node fabrication. If you assign, say, 10% probability of, China invading Taiwan over the next 5 years, and you assume like the economic impact of that is going to be in the hundreds of billions of dollars, well, it's sort of rational to like spend tens of billions of dollars as like an insurance policy to build domestic fabs. Now, the question is, what's the right way to do that, right? And the CHIPS Act, right, put in place essentially like dispersed grants, some of which had been given out, but most of it like that was converted into equity hadn't yet been given out by the CHIPS Act to Intel and the Secure Enclave program. And so they just basically just converted essentially grants into equity, right? Which, if you're saying like the government is already going to be spending money to subsidize national champion, that policy decision has already been made. And then the question is it better for the United States essentially just give a free grant of a subsidy to the company? Or is it better for, the quote taxpayer to have some sort of equity upside? The question is all in terms of governance, right? Like, is the government going to be making decisions like on behalf of Intel that are ultimately going to be like injurious to the competitiveness of Intel over the long term? And I think everyone's prevailing view is that Intel is basically like cooked unless something happens. Like they're on the track for bankruptcy. Like they're not good. And the 18A chip has almost no buyers. And it's like if Intel fails, like we're totally host, right? Essentially. So it's one of those situations which is like, okay, facts on the ground are like almost like an emergency, and then you're looking around for the different tools. So like Intel might be a special case, and it's like I also don't want to like set this as like a precedent to be like, oh well, the government should just go around buying swaths of private industry, because there was a similar deal with MP Materials, which is a rare earth mine, and they paid massively above market rate for essentially golden shares and became the largest single shareholder in this rare earths mine. And so it's like, okay, you could sort of treat each thing individually and say, that makes sense for this strategic purpose. But like the scope of what's considered strategic, and this goes back to a comment that our friend Patrick Witt made at our summit. He is now essentially the new Bo Hines at the White House. He was at the Office of Strategic Capital, and they just got a massive influx of new kind of credit authority, up to, I think, $200 billion ultimately, to do this sort of, again, more debt-based investment, but they're actively trying to get more authorities to do more explicit equity investment, right?
But there's a big difference between those two, right? I think there is broad sort of bipartisan consensus at this point that we need some sort of industrial policy for key sectors, right? Clearly for chips, because we're worried about what's going to happen with Taiwan. Fine. And then once you're doing industrial policy, you're giving out money. The question is like, do we want voters, American citizens, to see a return from this money that's being invested on their behalf? Well, one way of thinking about that is the industrial policy is the benefit, right? Having a secure supply chain, having industry in America that creates jobs, like that's its own reward. And I think you could even go further, and you could have sort of credit facilities, right? So there could be a debt relationship with these companies, and the American people could see a return. And we saw some of that in the aftermath of the GFC in 2008. I think when you cross the line from debt to equity ownership, that is where you start to get to something that looks a little bit more like a slippery slope. First, in terms of, you need to have a trust me, bro relationship with the government is saying they are not going to exercise governance power in Intel, but like we'll see. They go to just change their mind. That's a policy question.
Mm-hmm.
And I think once this tool is on the table, right, there's a difference between industrial policy on the one hand, including sort of debt as opposed to a pure grant, and nationalization of industry. And it's hard to say that this is not partial nationalization of industry. And today, yes, they're buying it, and then in the rare earths they're paying above market. But in the future, I mean, it might be eminent domain. It might be just straight up. Bernie Sanders decides he gets elected president, and no more millionaires and billionaires, and so like I think crossing this particular Rubicon is worrying, specifically because of the equity structure of it.
Yeah, and again, I struggle with this because it's hard to generalize the principle here. When I try to model like the shift that's been happening, like you say, like, when you say private versus public sector, sometimes it obscures what like you mean by the private sector. Because I think the private sector, in the last few decades has been evolving into what we might call like multinational capitalism, right? Where like modern sort of corporate multinational like Hydra is not really aligned to first order to like national strategic purposes. They have, tax residency in Ireland. They outsource the manufacturing into Asia. They have their, their corporate management in the US, and they have global operations. They think of themselves as a stateless entity that maximizes shareholder value. And that was the model that worked, I think, from the 90s to like, the last few years, maybe. And I think just the structure of the global system, the political system, is making that sort of arrangement like not tenable anymore. And so we're seeing this like struggle take place, essentially shifting from what we might call multinational capitalism to like national capitalism. And you see that reflected in these like, very overt displays of like genuflection from these big CEOs to Donald Trump. They all go to the White House and they announce these multi-$100 billion investment pledges, from Sam Altman to Mark Zuckerberg, everyone, right? And they're all kind of trying to kiss the ring, right? And I think that's an exertion of national strategic power and interest over multinational global companies. And it's funny because you could imagine like that's kind of like a almost like a progressive talking point for like not too long ago, right? It's like these big tech companies, they have too much power, they're monopolies, surveillance capitalism, they're not accountable to democracy, they are arbitraging our labor markets, they're outsourcing our jobs, they're essentially exploiting us like feudal serfs. And so we need to elect progressive champions like Teddy Roosevelt that will break up Google, that will impose antitrust, that will respect our privacy rights. And to a certain extent, like, I would want Trump to be doing more on the like civil liberty side. Like if he's got the power, it's like, don't just like take an equity cut, like change behavior, like make it like better for the average American citizen interacting with technology, not just being exploited, and not just basically the government acting as like the capo de regime to make sure they get a cut of the action. Right. I think that's like the failure mode here. Right. Whereas like you want the national government to be acting as a check on exploited business practices that essentially are arbitraging and exploiting jurisdictional arbitrage. But the solution to that isn't to just be like, all right, like the government basically whacks you on the head and says, give me 15% of your sales, NVIDIA. Right? It seems a bit too crude, but there's a slippery slope between, because at this point, like there's no such thing as a free market, right? It just doesn't exist, right? When you have US China basically trying to carve up the world into separate competing tech blocks, when it's a matter of national policy to like dominate these respective strategic industries, there are just inevitably going to be state prerogatives at play in how capital is allocated, what sort of rules are imposed. And I think we're just seeing it's such a blunt force application of, like you have to bend the knee, right? It kind of like appeals to this kind of strongman kind of aversion, right? We don't like that in our American system. But the underlying tension between trying to align multinational tech companies and that control huge amounts of capital, as well as like strategic technologies, to the national interest in an environment where it's like not an easy, it's not going to be like an obvious like result, like who's going to come out on top in the next 5 years, like vis-a-vis US China, as we race for these strategic prizes. So in that environment, it's kind of like you have to be pragmatic. You have to like look at like reality and be like, all right, in my sort of like political philosophy class, this would be the ideal setup. But like in practice, this is like the constraints.
Yes, but I mean, there are two different principles here. There's sort of free markets, but then there's also rule of law. And while it is not realistic that the United States is going to allow perfectly free market, right? There is sort of a left-right disagreement about how much and what kind of interventions make sense. There is difference between a government intervention in the market, which theoretically the downside is you distort pricing signals. And I think if you were to look at like the housing market or the market for higher education, you can certainly see downsides of government intervention in those markets. And then there is just sort of direct, especially with this flavor of like personalist, taking a stake in stuff. And that is, I think, really what is responsible for why so much wealth is in the American markets, why there is such a different multiple put on the best US companies versus the best Chinese companies in the market, because the Chinese companies serve at the pleasure of the party. And, if the party decides they make too much money, then they're not going to make that much money. And here, when we talk about rule of law in the United States, mostly we're not talking about rule of law from each other. I mean, we have pretty good, ways of enforcing contracts, but there are all sorts of problems with enforcing sort of private rights of action. Really, we mean rule of law from the government, that like we have very strong property rights and those are not going to be infringed, even if it is strongly politically expedient to do so. And so, I don't know. I think to me there is some line here that is crossed that is just different from, we're deviating from the Platonic ideal of laissez-faire.
I agree with you, right? There's a line there where it's like economic statecraft. And this is a good, healthy debate here because, like economic statecraft is really all about wielding multiple tools of national policy, whether it's foreign exchange, fiscal policy, monetary policy, trade policy, all of which are basically putting non-market influences on the private sector. Right. If the government has a bunch of levers and saying we're going to jack up tariff rates, or we're going to impose, special duty requirements, we're going to, subsume the Fed and like force interest rates down. We're going to like, jam our allies and force them to, do domestic investment and, adjust their currency policy. These are not market things. Right. And so you sort of are accepting the premise that, okay, like, is that like, are we in a regime where those are required or not? And then there's a line of like, okay, like, how far can the executive go in executing statecraft in a democracy with, like, generally speaking, a free market capital system? And I think we're seeing that tension now, right? Whereas like China has no constraints in that regard, right? Like its version of economic statecraft is just, the party says jump and they say how high. And even Europe, to a certain extent, is much more like China in that respect. Like Brussels says jump, and a lot of companies inside the European Union have to say how high. And I think the U.S. historically has been very much averse to that type of economic statecraft. And we're sort of being forced into it, right? By virtue of the fact that we have these legacy vulnerabilities that we have to radically kind of patch up. So we have to like go and jam up the, Intel to like force them to actually get good at making chips. And they haven't been good at making chips. Like the free market kind of failed in that respect. Like TSMC just like dominated from state policy in Taiwan, and as well as monetary policy that suppressed the value of their currency. And so it was like, okay, we kind of we step back, we let the world essentially globalize, like we've absorbed some of that cost. And now we're like, we want to sort of reset the deal, right? But resetting the deal requires like, the unitary executive. And the unitary executive is not always like the wise old, technocrat philosopher king who's like knows these clear ethical lines. Usually it's the strong man who's just looking to like bash heads and get deals done. And rule of law is not the first order concern. So I agree with you, right? Because once we set this precedent, then it's like, okay, everything is just purely transactional. Everything is just a matter of who can effectively a bribe or cajole to avoid getting whacked, and it incentivizes much more costly, I think, parts of our political system. And it also, I think, speaking to the decentralized concentration thing, like economic statecraft in the China model, tends to centralize things, because it's like the government wants to have these levers and it needs state champions to like operationalize them. And it doesn't have the time or the bandwidth or really the need to have a bunch of decentralized, small, innovative companies. It wants big champions to, invest hundreds of billions of dollars. And so I do worry that like, in order to try to like beat China, we emulate China and we kind of destroy like the core engine of American entrepreneurialism.
We'll resume this debate next week. But as we're coming up on the hour, Pines, I think we want to just cap off here by talking about, the sort of maybe like intersection of these different kind of geopolitical questions at hand. And the one I'm referring to now is largely AI. I've been keeping up a little bit with the All In Summit that was happening, I think, yesterday and today. They did an interview with Elon Musk, which which had some interesting nuggets in it. We can jump into that if y'all want. But he made a statement that was basically like, the AI will be smarter than anything on the planet by next year, and then it will be smarter than all of society collectively by 2030. And then he also went on to say, if AI and robots don't solve the national debt, we're toast. So just kind of curious on reflections on that, and maybe where we're at in the AI moment. And if that intersects with Bitcoin at all, that would be a great connection.
I think people's perceptions are driven by mimetic hype cycles, which tend to go boom and bust like very frequently. And it's important to just like actually track the state of technical progress, which is actually hard because the only real indicator of that is like either the benchmark performance on these different sort of evaluation schemes for different sorts of tasks and different domains, or like revenue, right? Like, are the businesses actually generating revenue to cover their costs? Is the capex that's being expended actually being recouped? What does that imply? Different ways of assessing like state of quote structural progress. And I think on both those dimensions, I think it's clear that we're up and to the right, like accelerating very fast. Like benchmarks that were like getting scored, like for example, SWE-bench, which is a software engineering bench, essentially a set of 500 tasks representing, most software development, software engineering types of work. 18 months ago, when the benchmark was created, it was like 12% was being scored on the frontier labs. Now, just the other day, Blitzy, which is a startup that just kind of came out of the woodwork, scored, I think, 86% on it, which is actually close to probably the max possible score. So almost like software engineering is almost solved. And Blitzy, just as an example, like ingests, like it's actually like more economically useful. Like it takes like 10 million line code bases from like airlines and financial institutions that are written in COBOL that haven't been touched for 30 years because it's so fragile and rotten, and actually just one fell swoop translate it into modern, modern clean, a full stack, and does all the unit testing, QA/QC. There's like 10 to 20% that's still like human wrappers inside the enterprise, but like that's like going to be a dramatic transformation of like the sort of the software stack that's currently like that just sort of rickety thing that underlies all of modern capitalism. That's going to be like ripped and replaced almost in the next few years. And so we're seeing this hockey stick play out now. I think people had a misperception of GPT-5 when it was released because it wasn't as like a step change. But I think my understanding from the Frontier Labs is that they're dedicating most of the marginal compute to internal R&D, right? So like the consumer is getting like the weak T version of what is possible. It's like the bare minimum they have to do. It's like iPhone now, right? It's like the next iPhone is just like the next marginal thing that will optimize the upgrade cycle, right? Or convert, in this case, like, free users to paid users. But like the internal labs are about to hit the self-improvement flywheel. They're already looking at, computer use breakthroughs. The scale of the capex is I think going to be justified, pretty quickly when they start to automate large swaths of white collar labor. The job displacement effects will be very, very acute. I think they'll start to hit next year, and they'll become a political issue. I think then after that, like where on the hockey stick we go, we talked about AI 2027, AGI, the geopolitical thing. We can come back to that in a future episode, but I think there's no sense of stalling that I see. Now, I think it's spiky, right? We're learning now that we have reinforcement learning paradigms. We're learning test time compute. And it's basically the bitter lesson is just things keep scaling, and there's no wall that we're hitting apparently. And I think we're going to see in 2026, my expectation is we'll see a transformation from AI principally being used for enterprise and for like essentially social engineering marketing, right? And like business automation to like mathematical and scientific discovery. And that will be like a true shift in terms of what's the economic possibilities. Obviously, Elon is very much focused on robotics. That I think is a hard problem to solve. I'm not expert in that area, but I think they're doing a huge amount to collect the sufficient amount of data. And that's kind of the lesson is that like looking at what was it at Genie 3, Google's basically renders like a real-time environment and has persistent memory and like real physics, and it's just trained on YouTube videos basically. And so it's basically internalized a world model with like accurate physics just from just watching YouTube videos. And so the premise for robotics was that you always would need like lots of physical tests in the real world to like learn. It turns out that might not be the case, in which case you can have simulation environments that just radically get the RL reward signal kind of up to the moon, and you can get actual effective capabilities pretty quickly. So I think the last point to connect it to Bitcoin is just one on the software stack. Like I think there's an interesting connection between Bitcoin development and all the debates that have been happening with like knots, is that there's implicitly this skill barrier and knowledge barrier between core devs or people that like to think of themselves as devs in some capacity and everyone else that just like is a node operator. And I think as we sort of go through this software AI revolution, like the ability for anyone to just quickly understand like what a BIP means and how to like interact and engage in the technical debate is going to dramatically decentralize, which I think is a good thing. But I think it will change the nature of how, Bitcoin development plays out. So just as like a one, like, subset of the implications for Bitcoin, the monetary effects we can talk about in a future episode, hyperdeflation running up against job displacement, government sort of fiscal response, and our social and political response. That's a larger conversation, but
and inevitable nationalization of the frontier labs.
Yeah, I think,
and whether they're going to let us do open source. Yeah.
I mean, that's less. I mean, I think this administration has been sufficiently politically captured by the relevant political brokers that I don't think nationalization is on the table. But I think you could see like a bidirectional capture where just everyone mutually understands like the terms of the deal. And it's not like nationalization in the same sense of like equity ownership. It's the more like, yeah, you're not allowed to gate, we already have like Anthropic voluntarily sort of cutting off access to Chinese users. And I think we'll just see that play out, right? Just sort of the bifurcation of these tech stacks that become, de facto, national.
Zach, any final thoughts, or should we wrap it up?
No. Yeah, I think probably much more to talk about on the AI front, but don't get me started now.
Okay, great. Awesome. Well, good rip, guys. And we'll see everyone next week.